A lot of people ask me, how do you actually get rich in the stock market? Well, I have 3 favorite patterns I'm going to teach you right here. What's up, Tim Sykes here. A lot of people ask me, how do you get rich? Obviously, you taking 12,000, turning into nearly 5 million. Your top student started with just 1,500. He's over 7 million. First of all, it's very difficult to make millions of dollars with penny stocks. I'll be straight up with you. 90% of traders lose if you look at academic study after study. So how do you avoid being just another statistic? Number 1, preparation. I have a lot of DVDs, video lessons, webinars. I have mentoring. Click the link just below this video if you want to be mentored. I highly suggest it because studying on your own might get you there, but it'll take you a lot longer. It helps when you have a mentor. It helps when you have a guide. It's not just me. It's most of my top millionaire students also mentoring other students. We have a great community. But if you want to break it down, none of my millionaire students or I trade thousands and thousands of different patterns. This isn't rocket science. I have 3 favorite patterns. Number 1, my most favorite pattern for pretty much all of 2017, 2018. I don't know how long it's going to last, but it's dip buying morning panics on recent multi-day, multi-week, multi-month runners. When you get these 20, 30, 40% drops inside of a half an hour, oftentimes it bounces. The first drop is usually the biggest bounce. It's kind of like a bouncing ball, and then it starts to peter out. If you've seen my penny stocking framework guide, this is pattern number 5. And this is my single favorite pattern because you can make 10, 20, 30, 40% on your money inside of an hour or 2. It's not easy always finding the exact bottom. It's not an exact science. There are some warning signs. I have 600 plus video lessons on dip buys. So I suggest you study the past, then you're better prepared for the future. But that's my number 1 most favorite pattern. Number 2, first green day on a stock that maybe has been downtrending, maybe has multiple red days in a row, and then it puts up one solid green day with big volume, a nice catalyst. Hopefully it's been a former runner. I like buying that overnight, especially if it's in the OTCs. A lot of my top students, Tim Gritani likes this, Huddy, my newest $200,000 plus profit student, Roland, who's closing in on $1 million in profits. He started with 4,000. A lot of my top students and I like the first green day because you have that one day of momentum shift on a former runner. It kind of lets the whole world and the community of traders know that this stock might be back in play. It might re-spike. And if it was a recent runner, if it was a former runner, traders remember it. Short sellers are less likely to short it because they know it can run for multiple days. Momentum buyers are more likely to buy it and just hold it because they know it can run for multiple days. So stocks kind of have memory. Like if you work out, your trainer says muscles have memory. Like if you were jacked once, you can get jacked again. Stocks have memory too. First green day is great, but you need big volume, you need a big percent gain, and ideally you have a catalyst too. My 3rd favorite pattern, which used to be my favorite pattern, but we just haven't seen that much of it, shorting the first red day on pump and dumps. Pump and dumps are very easy to spot. You can see them run for several days, several weeks, several months. Sometimes I have tons of DVDs and video lessons on blatant pump and dumps and the price action and the patterns that you'll see. You wait for that first red day and you look for shares to short. That's usually the beginning of the end. The one nasty thing about that is that oftentimes when you have that first red day, because everyone knows that's the beginning of the end, you have to anticipate that first red day ahead of time, because when there is a first red day, there's usually no or very little shares to short. So you might have to start to anticipate a first red day coming up in 2 or 3 days, and you're trying to withstand the losses before you get to that optimal price action. So it's not as easy. Short selling is not fun. If you have a small account, I don't recommend short selling. There's a reason why I'm mainly using my first 2 patterns, buying the first green day with a strong catalyst and strong volume and strong price action, or dip buying a morning panic. The bigger the panic, the better. Ideally no news, and ideally the stock is a multi-week or multi-month runner. That way you get other dip buyers interested and short sellers who have been losing on the way up, and they finally cover their shorts, so you have 2 groups of buying that dip. So Buying dips, buying first green days, shorting first red days, those are my 3 favorite patterns. Again, this isn't rocket science. Most of my top students and I just have 1, 2, or 3 patterns that we play again and again and again. And when you start to learn to love a pattern, you have experience with it, you know the ins and the outs, you get very comfortable, you get very good at that. So these are my 3 favorite patterns. Leave a comment just below this video. Let me know what you think. Hey, Tim Sykes, millionaire mentor and trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.